Canada offers various tax benefits and credits to its residents to help them save money and support various aspects of their lives. These benefits and credits are designed to provide financial relief and incentives for specific situations and expenses. Here are some of the key Canadian tax benefits. 1. Canada Child Benefit, CCB. The Canada Child Benefit is a tax-free monthly payment made to eligible families to help with the cost of raising children under 18. The amount is based on family income and the number of children in the household. 2. Goods and Services Tax, Harmonized Sales Tax, GST, HST, credit. The GST, HST credit is designed to help low and modest income individuals and families offset the sales tax paid on goods and services. It is paid quarterly to eligible recipients. 3. Canada Workers' Benefit, CWB. Formerly known as the Working Income Tax Benefit, WITB, the CWB is designed to supplement the earnings of low-income individuals and families who are working. 4. Child Disability Benefit, CDB. The Child Disability Benefit is a tax-free benefit for families who care for a child under the age of 18 with a severe and prolonged impairment in physical or mental functions. It is typically paid monthly along with the Canada Child Benefit. 5. Medical Expense Tax Credit. Canadians can claim eligible medical expenses on their tax return, which can help reduce their taxable income. This includes expenses such as prescription drugs, medical devices, and certain medical procedures not covered by insurance. 6. Disability Tax Credit, DTC. Disability tax credit is for individuals with a severe and prolonged impairment in physical or mental functions. It can provide substantial tax relief and can be transferred to a supporting family member in some cases. 7. Education and Textbook Tax Credits. While these credits were phased out at the federal level, some provinces may still offer them. They allow students to claim tax credits for tuition fees and textbooks. 8. Home Buyers Plan, HBP. This program allows first-time homebuyers to withdraw up to $35,000 from their Registered Retirement Savings Plan, RRSP, to purchase a home, with a repayment plan over several years. 9. Tax-Free Savings Account, TFSA. While not a tax credit, the TFSA allows individuals to earn tax-free investment income within a specified contribution limit. Any income or withdrawals from a TFSA are not taxed. 10. Registered Retirement Savings Plan, RRSP. Contributions to an RRSP are tax-deductible, reducing taxable income. These savings grow tax-deferred until retirement when they are taxed at a lower rate, assuming the individual's income is lower in retirement. 11. Home Renovation Tax Credit, HRTC. This credit may be available for certain home improvement expenses, but it is not a permanent feature and may be offered during specific periods. 12. Public Transit Tax Credit. While this credit was eliminated at the federal level in 2017, some provinces may still offer it. It allows individuals to claim a credit for eligible public transit expenses. 13. Pension Income Splitting. This allows eligible couples to split their eligible pension income, potentially reducing their overall tax liability in retirement. These tax benefits and credits can change over time and may vary by province or territory. It's important to stay updated with the latest tax information from the Canada Revenue Agency, CRA, or consult with a tax professional to ensure you are taking advantage of all available tax benefits for your specific situation. Thanks for watching. Please subscribe for more Canadian money videos.